Well, hello and welcome to another exciting and amazing episode of the show. I'm Jay Connor, your host, also known as the Private Money Authority. And I'm so excited because I've just got an amazing guest on with me today that you're definitely going to want to stay on to the end because you're going to learn some amazing stuff. My guest is a friend of mine. He's the founder of what's called the Great Northwest Home Buyers and Kaizen Properties. But even more importantly, and what he's really passionate about, he is the host of the show, the podcast called the Real Estate Investing Club. Well, he started out his career way back as a management consultant for one of the Fortune 500 companies. And at that time, when he was involved in that, he was just completely didn't have a clue as to what was going on in real estate. Well, he was with his Fortune 500 company for about 7 years in a cubicle. And one day he just finally decided enough is enough is enough. So he stumbled into real estate after buying this broken down triplex in Tacoma, Washington. And as they say, the rest is history. Anyway, he sold that first duplex. And then he knew he had the real estate investing bug. So he wanted to really get involved in things. So he continued to flip. He continued to do a wholesaling of homes in the greater Washington area until he finally found his niche that he's really the most excited about. And that is self-storage and mobile home parks. So after purchasing the first two mobile home parks in Washington State, he founded Kaizen Properties, which now operates nationally, and it buys and repositions self-storage and mobile home parks all across the nation. So he's got extensive experience across many different asset classes and strategies. So he's eventually decided to start what you know today as the Real Estate Investing Club podcast and YouTube show. There's a good chance you've already heard of him and met him, but just in case, it's my pleasure to bring right here on the show my guest today, Gabe Petersen. Hello, Gabe. Welcome to the show.
Jay, yeah, thanks very much for having me on. That was quite the introduction.
Well, it's easy to do a great introduction when I've got a great guest. So when did you start your podcast, the Real Estate Investing Club podcast?
Yeah, that came about from COVID, actually. Before COVID, I was doing a lot of networking with other real estate investors, and COVID hit and I couldn't go out and shake hands. And so I decided to start a podcast, next best thing. And I'm glad I did. I have absolutely loved it. I love talking with my guests. You were on my show. We had a good conversation. So it's been a lot of fun.
That is awesome. That's awesome. So, I mean, you've done, just about everything there is in real estate. I mean, you wholesaled, you've done flips, but now you're really attracted to mobile home parks and self-storage. So, and you can talk about them in any order you want to, but why have you been attracted? What are the benefits? Why are you so excited about self-storage and as opposed to other real estate opportunities? And why are you so excited about mobile home parks?
Yeah. I mean, what I really like just about real estate in general is there's so many different ways to go about it. There's so many different asset classes, different, business models that you can attack. And so there's a lot of variety, a lot of opportunity out there. Self-storage, I like that it was a business. It's more of a customer seller relationship versus a tenant landlord. And so I like that. I like how the management works. It's a very easy management style that you can have with self-storage facilities. And so once I didn't start in commercial as a lot of people do. I started in flips. I started in wholesales and eventually worked my way up into commercial. And once I got there, I just kind of, looked at the scene and I looked around for what type of asset classes I wanted to dive into. And ultimately it was self-storage, mobile home parks. They're both recession resistant asset classes. And so they've performed well historically in recessions. And I like that. Self-storage is just a lot of fun. It's fun to manage and buy them. We're closing on one right now. Actually, tomorrow is the closing date. So it's a lot of fun. It's a good asset class to focus on.
So, as far as your business model goes, for both self storage and mobile home parks, my question is, do you look for distressed properties that you can, fix up and then flip them and sell them? Or do you look for distressed properties and you plan to hold them for the long term? Or what's the business model look like?
Yeah, it's a little bit of both. I guess all of them we want to have. There needs to be an upside, so we're not looking at class A facilities that buying them at a 5 cap and just holding them for 30 years. No construction or maintenance required. Don't look at those. I like to look at things that need a little love. If there's some wear and tear on the building, love that. If there's room for expansion, I love that. If maybe they haven't done the best at management and they've kind of let occupancy dip, love seeing that. So anywhere where I can add value is really what I like to see. Did I answer the full question there? I feel like that was a 2-parter, and I think I
yeah. So in other words, so are you fixing them, you sell them, you hold them? In other words, what types are you buying and what's your exit strategy?
Yeah. So I said this already. I guess I forgot to finish out my answer. I'm doing both, and so there are a few of them that I'm going to do a long-term hold, and then others is a 5-year exit. And so we're buying, repositioning, and then selling on the upside.
So what's your criteria of what to hold and what to sell?
That one is really comes down to my own preference. If they're not giving me a lot of headache and there's good cash flow, then I want to hold it. If it's and also if there's other investors involved, if it's just me in the deal, if I put all the capital up and I got, there's a deal that I did seller financing, great terms, I put all the capital into it. The management's going well. So that one I'm gonna hold on to. Others, I have other investors involved. And when other investors are involved, I need to take them into consideration, and so that the exit time frame is a little bit sooner than if I were to do long-term hold or just put my own money into it.
I got you. How do you find mobile home park deals?
Yeah, I mean, it's that's the beauty of real estate, is that every type of marketing strategy works similar across all asset classes. So mobile home's no different than self-storage, than multifamily. And so we look mostly off market. That's what I like to look. I don't really like to look on market. So we do mailers. We do ringless voicemail, text blasts, cold calling. I think that's it. I think that kind of covers it.
Well, that's interesting that, I mean, these asset classes, self-storage and mobile home parks, like you're not looking on LoopNet. You're looking for those properties that are not listed to be sold or not being promoted to be sold.
Yeah. I generally find that if I can talk with the seller, one-on-one, then we can get terms that fit both parties better. When there's brokers involved, a lot of times the seller is not going to be amenable to like seller financing. I'm a huge fan of seller financing.
Well, just like a house in the multiple listing service, you ain't gonna get seller financing in the multiple listing service.
Yeah, exactly. And so I like that. In fact, 4? Yeah, 4 properties right now that I own are seller financed, and great deals. It works on both ends. The seller gets more money and it's an easier close. We get terms. We can even give them more. We can increase the price if they give us better terms. And so it's a win-win for both parties, in my opinion.
Are you your own negotiator? In other words, are you your own acquisitionist?
Yeah, I have some acquisitions guys that help me out, but I do the negotiating and the offers. But yeah, I got a team with me, and we're crushing it, and they're just as, putting in just as much as effort as I am.
What does your team look like?
So for I guess we can split it between acquisitions and management. For the acquisition side, there's just 3 of us, and then some VAs that help us out. And the 2 guys, they help with acquisitions and disposition. We do all the outbound marketing. I'll set it up and work with the VA to get the outbound marketing done. And then the warm leads will come in, and the acquisitions guys can pick them up if there's positive intent. And then once we close, then I work with my property management third party property management companies to manage the facilities, and they hire boots on the ground and all that stuff to keep them managed.
Do you have like a specific math formula that you plug in the numbers, and the math tells you as to whether a mobile home park is a good mobile home park deal and a self-storage facility is a good self-storage facility? In other words, what's your buying criteria? You got some magical Excel spreadsheet that tells you to buy or pass, or what's that look like?
Yeah, I feel like, and if you're an investor, you got to have your special formula. I feel like every investor I talk to has their own little Excel sheet that has their secret sauce. But yeah, I just have I have an Excel sheet that we plug everything into, and kind of gives me a breakdown of whether of what I can expect. And so it varies. It's super dependent. I've bought really low cap rates, like 3 cap, knowing that I could push it up to a 10 cap when I flipped it. And I've bought, it really depends. If the metro is good, if it's a small metro, I'm going to offer, I want a higher cap rate than if it's a larger metro. If it's a growing metro, I want a shrinking metro. I almost will. It's a pass unless they give me a really good deal. So there's a lot of things that, go into it, but, there's a lot of things that go into it. There's no real hard and fast.
Lots of variables.
Yeah.
So, let's first start with mobile home parks. What were some of your early struggles and lessons learned in investing in mobile home parks?
Early struggles, lessons learned.
And it'll be the same question for self-storage as well.
Yeah. Self-storage is a little easier because there's not as many utilities. And that is the big issue with mobile home parks. A lot of them are older, and they have old utilities. And like right now, we just had a line break, a sewer line in one of our parks that we need, and we're going to have to replace that entire line. And so that has been the biggest issue, is the utilities there. And then getting good management in place. If you don't have good management in place for a park, then it is going to be a nightmare. You will not want to own that thing. So finding a good boots on the ground, good property manager to help you out is so important. For self-storage, big lesson learned. I guess it's not, whenever you see a deal, most self-storage facilities out there, if they're under 25,000 square feet, a lot of them that I've found have been owner run. And so the owner does not have, somebody on site to do management. They don't have third-party property management, anything like that. So when they send over their financials, they're not going to have those additional expenses that you're going to incur once you buy the property. And so, a lot of owners, they'll send over their financials and they're like, I want an 8 cap on my self-storage facility. I'm like, that's totally reasonable. We can move forward with that. And then I look at it and I'm realizing he wants an 8 cap on his financials, using my financials. That's actually a 5 cap or a 6 cap or whatever it is. So you really got to be wary of how they're doing their calculations. Do they have property management in place? If they don't, you got to make sure and bake that in, because you're not going to be, if you're buying out of state, you're not going to be wanting to manage it. And well, anyways, either way, you're going to want to have a third-party property manager. I would not recommend doing it yourself. So just make sure that's in there.
There you go. I sure wouldn't be interested in managing my own as well. Is there any overall, all-encompassing, biggest lesson you've learned from your deals, so to speak?
That is a good question.
given what you just said, I would expect one big lesson or one big piece of advice is for sure know your numbers before you make your offer.
Yeah, that's a big one. That's a big lesson learned. I think just the biggest one is just keep, that things are always going to fall through. It could be even today, like this deal that I'm working on right now, something came up at the very, very, very last minute. Like we're supposed to sign the papers tomorrow. So a deal is never done until it is, the pen has been inked. And so you just don't expect it until you close. And if it falls through, whatever, just keep moving forward. You're going to find something else.
So don't count your chickens before they hatch.
There
right?
you go. Wise wisdom. Whoever made that phrase.
Well, you may have a challenge thinking of an example of this, but what first comes to mind is what was your favorite deal you've ever done and why?
Favorite deal I have done. Let me think about that one. So, I think my favorite deal is probably an early flip that I did, just because I did it with a partner and we had a lot of, we were friends and we had a lot of fun doing it. I love doing deals with other people that I vibe with and
So it was was it a joint venture?
Yeah. And we just had a lot of fun, and that was probably my favorite deal just because of the relationship. Outside of that, in terms of just like numbers and whether it was a good deal, is probably the mobile home park that we own out in Moses Lake. The seller gave us absurd terms. It was like 2.something% interest, 11-year amortization, and we didn't put very much down. I can't remember what we put, but it was such a good seller financing that we basically got it, and now we're running it, and it's running pretty well.
Sounds like that might have some nice positive cash flow.
Yeah, it does pretty well.
So let's talk about buying a property and repositioning it and like making it worth more money. So, and let's talk about both self-storage and mobile home parks. What can you do to those types of assets to increase the value to where if you wanted to exit it in 5 years, it would be worth so much more money than it is today?
Yeah, I mean, that's another reason why I love this stuff is there's tons of ways to do it. The easiest one is always leasing up vacancy. So if you're buying a property that has 2 units occupied, and there's 100 units, if you lease up those 98 units, you're going to, more than triple your value. So leasing up is an easy one, and that can be done. A lot of times I see that they just don't market it and they don't have any marketing strategy. And so, 2 occupied is an extreme example, but a lot of times they'll have 60% occupancy and they just don't market their property, and that's an easy fix, an easy value add to come in there and push the vacancy, push the occupancy up. Other ways is expansion, fixing properties so if your property is in bad condition, and you're not able to get market rents because of that, maybe there's dirt roads, just a lot of garbage everywhere. It's just not an appealing property for somebody to come and live at. Then an easy way to do is just to fix up the property to the point where you can get market rent. And then also you can add ancillary income, mobile home parks, RV parks. You can add laundromat, small laundry units. You can bill back for utilities. Self-storage, you can do tenant protection. You can offer, tenant protection insurance, and you can sell locks, stuff like that. So there's, I think the easiest one, the one that I really look for, is vacancy. So if I'm looking for a property, I really try to find something that's vacant in a good metro, because of bad management, and that's my favorite thing to find.
Gotcha. That makes a lot of sense. Gabe, what would you say it is about your personality or your daily habits or business practices or whatever that just really lends to your success? What have you got going on up here in between your ears that maybe some other folks don't, that drives your success?
I think I'm just extra. I just don't give up, and that's the key. That's the only thing you need to do, is just keep pushing. And eventually you'll find success. I've had tons of failure stories. Real estate wasn't the first business I tried to run. I tried to do e-commerce, digital marketing agency, and I had a little success there, but nothing like I've seen in real estate. And so the key was just I didn't give up. And if you don't give up, then you can't lose. So just keep pushing through, and eventually you'll find success.
Well, I experienced the same thing. I relied on local banks to fund my real estate deals when I started from 2003 to 2009. And then in February 2009, with no notice, I lost all my lines of credit, not because I didn't have a good credit score or not making payments, but I learned very quickly, not only myself, but like every other real estate investor in the nation, lost their lines of credit. And so through persistence and pushing forward, I learned all about private money. I'd never heard of private money or anything like that, and so that's how I got into private money. Private money actually was without the challenge and the difficulty. And I'm sure you will agree that the biggest growth opportunity that comes along is when you're in the middle of a mess and you got to figure it out. Would you agree with that?
Yeah, no, absolutely. It's when shit hits the fan that you really start to learn and grow and stretch, for sure.
Yeah. Have you got a morning routine or any daily habits that you stick to?
Man, I used to be a lot better at that. I don't these days. I really should get back into it, but if I were to be completely honest, I do not have a solid morning routine that I follow. My routine is mostly I get up, I get coffee. I kind of just sit. If it's warm enough, I'll sit outside and just kind of drink my coffee until I feel the urge to go and start working. And then I start working. I used to get up and work out. I still work out every day, but I do it in the afternoon. But I used to get up and work out and meditate and read and all this stuff. And I just got out of habit. I got to get back into there.
I got you. Are you, by chance, an avid reader? You like to read?
I do. Recently, I have not. I got papers flying everywhere because I got a window open. But recently, I've not been. I've been working too much. I haven't been able to pick up a book recently. But I used to read a lot, and I'm a big fan of reading.
As of all the books you've read, which book have you given away the most, or had the biggest impact on you personally?
Meditations by Marcus Aurelius. That is my favorite kind of just general life wisdom book. Everybody's heard of that book by now, but for those who haven't, it's just one of the old Roman emperors. He carried a journal when he was on his military campaigns, and he just wrote down some smart stuff. And it's a pretty concise read, but it's really, really, really nice. That and Seneca. I can't remember the title of the book, but one of Seneca's books that I really like.
Okay, I got you. And so, who do you say again? Who is Meditations by?
Marcus Aurelius.
Okay, I've heard of the book, but I haven't read it myself.
Yeah, it's a really good one.
Cool. What's your superpower, Gabe?
My superpower.
Not giving up.
Yeah, I don't want to sound like a broken record, but my superpower is just not giving up. It's just, when things go wrong, I just accept it and just move on. And I feel like the accepting it part is the hard thing because, when things go wrong, the inclination is to have an emotional reaction and then get stuck in those emotions. But I've kind of gotten good over the years of just getting to a point of acceptance and then thinking of a solution before I get carried away in those emotions.
Cool. So let's say someone wants to get started in self-storage, but they know nothing about it. They've got no experience, but it really sounds interesting. What's your best advice on how somebody would get started in self-storage?
The best way is to get a JV partner. Maybe you have money, if you have money, you can bring it as a silent partner. If you have anything else you can bring to a deal. Just find somebody who has experience and then do a JV with them. Second best is just to learn online. So you can, there's tons of YouTube channels out there. My YouTube channel, the Real Estate Investing Club. I'm sure you have some additional self-storage guys that come on your podcast. We also have some resources on the website, the Real Estate Investing Club, that anybody who's interested in self-storage can jump on. But the best one is to do a deal with someone who has experience in self-storage.
How do you find somebody like that? Like look up Gabe Petersen or something?
Yeah. Send me an email, gabe@realestaiteinvestingclub.com. Or you can just go into any of there's tons of Facebook groups out there that have, they're specifically focused on self-storage. Just ping that group, say, hey, I got X, whatever it is, and I can love to do a JV deal. Reach out if you're interested.
Would you say your answers are the same for someone that wants to get started in mobile home parks?
Yep, exactly the same. Do a JV or, do online education.
Are there mobile home park investing Facebook groups?
Absolutely. There's a Facebook group for everything. That's my opinion.
I was going to say there's probably a Facebook group for everything. So Gabe, of course, I'm big into private money. Have you used private money in your self-storage businesses and in your mobile home park business?
Yep, I sure have. I've done I've used private money on flips. I'm closing a deal right now with private money. And so I'm a big fan of private money too. Awesome.
Well, Gabe, I'm going to turn it over to you right now to give parting comments and any other advice you would like to share.
Yeah. My suggestion for anybody out there who's, who is thinking about real estate, you want to get into it. As I said, just find somebody who's there and kind of learn from them, and then just don't give up. If you believe in yourself and you really want to get in, you can. I feel like real estate is one of the best ways to go out and make a business for yourself. And it's a lot of fun. So just get out there, take the action, keep moving, and eventually you'll arrive where you're trying to get.
That's awesome. Gabe, thank you so much for taking the time to join me on the show.
Yeah, Jay, thank you very much. It's been a pleasure.
Absolutely. Well, there you have it. Another episode. This has been an exciting couple of topics, talking about mobile home parks and talking about self-storage. Gabe Petersen is very, very easy to find online. So be sure and reach out to him. I'm Jay Connor, the Private Money Authority, wishing you all the best. And by the way, I just really, really appreciate the likes, the shares, the subscribes. If you're watching on YouTube, be sure and click that bell so you don't miss any of the upcoming amazing episodes and my amazing guests as well. And do me a favor, if you think of someone or you know someone in your circle that you think would really benefit from this show, be sure and share it with them as well. So thank you for joining. I'm Jay Connor. We'll see you right here on the next show.